Hey everyone, how's it going? This is Gershon from Technical Option Traders Inc. Hope you guys are having a great day. So let's get started with the market today and see what's going on in this crazy environment that we are living in, right? So having a look at the S&P 500, we're going to start looking at the futures here. Overall, the S&P 500, the last few days, as you guys can see, the volume was rising like crazy, okay? And that was the selling volume, not the buying volume. The selling volume was up on the up and up. And today we had the FMOC decision where they did a 0.75 basis increase, which is very aggressive, and it's the highest one done since 1994. Okay, so that's something we want to pay attention to. Could this be a possible bottom? I don't think so, because the stocks just made a new low right over here, and the previous low was here. So sellers continue to push the market down. Okay, on the S&P 500, we can continue to see that, and this right here is a higher low. So the pressure remains to the downside. It does not matter how much the market is trying to move from here, how much the market is trying to bounce. We can see that the pressure, when it comes up, when the move comes to the upside, or when the relief rally does come, it gets sold off. All rallies are getting sold off all of the time right now. So is it really worth it to risk our position? No. So that's why it's worth it to protect yourself, protect your assets at all time. If you look at the S&P 500, we've officially entered the bear market, right? So the bear market talks are beginning now. It's like, how low are we going to go from where we're currently sitting? Okay, so that's what we have to start looking at. We have to start looking at individual sectors. We have to start looking at, income reports. We have to start analyzing based on that and looking at the price action. The price action today, obviously, a lot based on the continuous trades based on FMOC, all due to algorithmic trading. It's not because of anything in particular, right? It's all due to algorithmic trading. So right now, if we look at the 1 hour time frame, we can clearly see here on the 1 hour time frame, there's a lot of room that there's still left to cover. There's a gap fill up here we can go to, but for me, the 4,000 level is a big level. The S&P 500 must bounce to, consolidate, and then buyers must step in and push higher to about 4,100 and 4,225, right? But right now on the S&P 500, things are looking very, very bleak. If we look at the support or the next support down, it's around here, around the 3,700 mark. Then below that, it's around 3,650, and below that is 3,550 here. Okay, these are important levels that we must be aware of where the S&P 500 goes. Now, my measured move to the downside is right about here. So if we take this, if we do hit the 3,500 mark year to date, we will have hit about 26% to the downside, right? But so that's a big, big correction to the downside. We'll be almost at 2019 levels on the S&P 500. That is where I could start, possibly looking for positions to add in my index fund. But right now, still not adding any positions. I'm still letting this market figure itself out. It looks like the market is losing faith in the Fed. Whatever they said we didn't need to worry about, or the inflation was transitory, history is repeating itself again. Inflation is starting to prove to be a persistent threat that continues to increase and surprise the Fed. Okay, so obviously, if a recession does come, or a recession is coming, it looks like we're going to also hit policy error where tightening may happen as fast, and that's why QE is going on as anticipated. If we do get tightening, I believe that's fine. We will get on a road to recovery by 2025, maybe 2026. However, that's still a long ways away. But however, we don't know how bad the impacts are going to be still on this current market. So looking at the NQ, the Nasdaq consolidation here. After this consolidation, you guys can see we broke down. Now it's holding the support level, right? Nasdaq's next support level is right around here, which is the 10,650 mark. If this breaks, we're going all the way down to 9,000s, 9,800s. Okay, so Nasdaq is getting killed on a day-to-day basis, and as we can see, the buying pressure is continuing to increase on the Nasdaq. The selling pressure is continuing to increase on the Nasdaq. Even today, we had a lot of volume, but this volume is not worth looking at right now because there's not a lot going on behind the scenes here, right? So looking at that 1 hour time frame on the Nasdaq, we don't really want to be too judgmental. We can start to see the saucer pattern starting to form. Okay, we do need a push above the 12,200 level, but my big level is up here for Nasdaq. Okay, the 13,000. The 13,000 needs to be defeated, and then this level right here, which is a 13,500. It needs to get above this. If it can bounce to this, for sure, can consolidate, but until it defeats this, there's a high likelihood of failure below those, right? So consolidation sell-off, consolidation sell-offs are something something you like to see in a bull market, but something you're fearful of in a bear market, because this is where the price has been accepted, and so is this. Right, price has been accepted in these multiple points, so that means sellers either added to their position to push the market lower. So the longer the price stays at a point, that means it's being accepted. So if it's being accepted, that means the trend is going to continue to the downside, and that's not going to help any one of us if you're long to make money. So right now, to make money, you have to be short, or you got to play puts. Okay, so looking at a Dow Jones, same concept here, trying to bounce. Saw a rounding top is starting to form here, very, very close to the 2019 levels. Okay, so the 2019 high. So Powell just came out with a statement: we'll get rates to where they need to be in order to control inflation. Okay, so that important aspect of these comments that are being released by the Fed, you must pay attention to what's going on in home builders, what is going on to consumer sentiment. You must pay attention to that, and you must pay attention to where the price action is leading. The price action all over the place on all these time frames is bearish. There's no buying that we can see, that where there's no confidence, and then there's no buying, right? There's not a lot of money flowing in. So because of that, then right now the market is driven by fear. So looking at the Dow Jones, unless we can get above the 33,400 level, or the 33,400 level, it's going to be a very, very tricky situation for the Dow, because below this is just a long consolidation and waiting for this to break. Once this breaks, we're all going all the way down to 26. Okay, so that is something we want to be careful of right now for the Dow. It's trying to break down here. We must keep an eye on it, and if it does break, then there it goes, right? So the IWM, or small cap, or Russells, right? The Russell index, like look at this, bear flag breakdown, try to push down, pull back, retest, failed again. And if we get a break of this level right here, then that's it. The 2019 high will be defeated below 1,600 level. It's a game. It's going to fall down further for IWM, and the target price for IWM at that point would be around 14,450. Okay, so this is how we have to look at it. We have to analyze, we have to be subjective, and see what is going to happen here. Yes, the market can rally over the coming days, but the market has a lot of room to go to the upside. You got to be careful. You got to let these upper points, these upper levels of resistance, get defeated before you decide to go long in any of these positions, right? So if we look at gold here, gold is consolidating. It's trying to break out on the gold futures. Gold futures are trying to rise here, holding this trend line, trying to bounce. That's all great, but we have to be very, very careful with gold, because if gold breaks this level right here, which is around the 17,885, it's gonna be it's not gonna be pretty for gold, because gold can fall fairly quickly. Okay, so that's something we always want to pay attention to right now, gold, as well as we want to be looking at what's going on with VIX. Okay. So VIX once again falling today. It's coming down, which is nice. We like to see that. Pull a nice rally by the VIX, and a pull down here. We want to see it get below 21, and so we want to see it essentially get below 20. If it can get below 20, it will be a really, really good thing for the VIX, and it would be a really good thing also for the market as a whole, especially if we're looking to add long that the volatility has decreased in this current market. But right now, it's in consolidation, and we don't want to be looking to add any more into this position at all. So crude oil, making a rising wedge, looking to break down here. So if it breaks down below this level right here, which is the 110 level, we can easily go see possibly 100 again, right? So we have to be careful. Crude was stretched, but the volume over this whole move to the upside is very flat. So not huge participation on here. This is something we want to focus on and we want to try to avoid, okay? So be careful if crude does fail. The last time crude failed, the market came down aggressively. Always remember that what happened last time. Compare the current situation to the previous situation. We're in a worse off situation economically, so be careful of this, okay guys? So this is my overall analysis for the day. Hope you guys liked the video. I'll see you guys tomorrow.